expects a strong 2010 as foreigners continue to invest in South Africa, and the number of listings is also expected to at least match last year when 10 companies listed on the bourse. At the same time, though, a number of companies have announced plans to delist, among them Makalani Holdings and Setpoint. Joining me to discuss this trend are Makalani CEO Keshan Pillay and Noah Greenhill, who's Head of Marketing and Business Development at the JSE. Good afternoon, gents.
Good afternoon.
Now, let me start with you. It's obviously disappointing when companies decide to delist from the JSE. What are the primary factors that push them to do this?
Oh, it could be for a number of factors. Management see an opportunity to pick up the asset relatively cheap. At a relatively cheap price. Perhaps they've been bought out by a bigger company and being swallowed up by that bigger company. Number of reasons. Perhaps the balance sheet isn't strong enough and they want to take it off the market, fix up the balance sheet and do things that perhaps they perceive they can't do in being a publicly listed company.
Yeah, of course, last year was a very tough year for corporate South Africa. We were in a recession for at least 2 or 3 quarters. Did you see a rising number of companies delisting from the bourse because of the tough conditions?
Not really. If you look at the number of companies that delisted last year, it was around 20. Compared to the 10 that we listed. But if you look at the market capitalization of the companies that delisted versus the market capitalization of the companies that listed, you're looking at a quantum difference.
And were they smaller when they left than when they joined?
Of course, standard.
Keshan, let me bring you in here. Makalani came to market about 4 or 5 years ago. Why do you want to delist?
Makalani obviously has been under certainly strain through its share price. It hasn't worked optimally as unit holders initially envisaged. The lack of liquidity in the stock certainly created that problem. And in December 2008, after careful evaluation and discussion and consultation with the shareholders, the board decided to close the fund to new investments and explore options in terms of how best to return value to unit holders.
Well, going back a step, what were the reasons for listing the group?
The group was listed to raise capital. 2.5 billion was raised on the market through institutions and private investors. The idea was to finance BE transactions through mezzanine structures as well as targeted investments as defined in the Financial Services Charter. So it was clearly driven due to the Financial Services Charter objectives.
Now, do you think investors don't always understand companies like Makalani, a company that has lots of underlying investments that you really need to understand, and perhaps that's why liquidity wasn't created in this stock?
Absolutely. I think historically we've seen that these types of investment always trade at a discount to NAV. So I do think there is an element of misunderstanding or perhaps not understanding as much as they should in investing in these types of instruments.
Of course, you did have big backers and you still have a very big shareholder in First Rand, don't you?
Yes, First Rand controls around 40% of the shares. But also the shareholder base is quite small. I mean, we as Makalani Holdings, there are only 400 shareholders in total. So it is a very small base compared to other listed companies.
And difficult to create a market then in that stock.
And that's the problem. A lot of the investors got in and have been there since inception. So that creates the illiquidity in the stock.
So what are the plans then for Makalani, and what sort of timescale are we looking at? Because it must be quite a difficult business to unwind given your investments.
Well, the intention is certainly not to unwind, is to delist, allowing shareholders that want to remain to remain. So you could basically continue remaining in an unlisted vehicle, but creating also a liquidity event for shareholders who would like to exit. So certainly it's at a premium to where the market, the share price was trading, and therefore it's allowing shareholders that option of either exiting for cash or effectively remaining invested. And the intention is then to run the portfolio to maturity. 68% of the portfolio matures greater than 4 years. So if you have the time to sort of wait it out, these assets will basically mature and be redeemed, and capital will then be returned back to your shareholders.
Have you done what you set out to do, and that is to provide mezzanine financing for empowerment?
Yes, certainly. I mean, our portfolio has only got BE mezzanine finance. So the objectives have been met. I think clearly it's not reflective in the share price, and in an unlisted environment, that probably would come through much stronger.
Well, no, perhaps looking at the positive, you mentioned the market caps of the 10 companies that joined the JSE last year being greater than those of the 20 leaving. What plans for the current year? We were chatting to Lauren Chepek earlier this week. She said a couple of listings coming up quite early in the year. Do you think we're going to see a repeat of last year where we will see more companies coming to market?
Very difficult to say. But certainly the sentiment that we're picking up in the marketplace with the guys that we're talking to, there is certainly a much more action-orientated management teams that are saying, okay, what are we going to do this year? We need to look at raising our profile, capital, whatever we need to do. Let's go down the road of listing. Unfortunately for us, we only count them as a customer when they're on the market. Up until the time, you know as well as I do, that a listing could be pulled the day before that company lists, and then we don't have that listing anymore. So it looks good. We certainly hope to see more listings than we did last year. Certainly the guys that have mentioned in the media that they're coming to market, we're talking to those guys. They well down the track in interacting with advisors, with potential shareholders. So hopefully we'll see those guys.
Is the environment right this year for listing? Because we are still seeing some volatility on these markets.
Stephen, it's an interesting question, because in my view, the environment has to be right for the specific business. Where the economy is should theoretically be irrelevant as to when a company lists. Because if you need the capital, or you need to do what you need to do strategically, you can't wait to time the market. If you can time the market, well, then you'd be a multi-trillionaire, billionaire, whatever it is. It's all about the strategic value proposition of that company. Notwithstanding that, I think the economy is in that phase where we're out of that recession. Guys are looking to do interesting things. Sentiment is positive in South Africa. That's got to be conducive to some kind of corporate activity on the market.
And Keshan, just to confirm, once you are delisted, you will continue to raise new funds and continue to support Black economic empowerment in South Africa.
Yes, the intention is certainly to raise new capital in an unlisted environment and to continue funding empowerment deals, as well as targeted investments, low-cost housing and infrastructure spend.